What is going on YouTube? It's Sankey. We're back with another one. Alright guys, so in this video I'm coming at you with a couple of penny stocks that are on my watch list and I want to put them on your radar. And I've also grabbed some stock in the market that I want to share with you guys also. Now before I get to it, there's something I want to talk to the family about, and that's the current market situation. Right now, we know the market's choppy, right? So what I want to go over very quickly is the crash, the correction, panic selling, and where I think the market is heading going forward, because I think it'd be useful for you guys to know. Now I've been investing for a long time, and pretty much every year I've been investing, I've seen corrections in the market. And I define a correction as a 10% movement downwards in the overall market. Now, as you guys build up your experience as investors, you're going to start to see more corrections. So this is just common practice in the market. And as I said, it brings its benefits. It allows you guys to average down on some of your plays, allows you to rebalance your portfolios, and also allows you to pick up that stock that you couldn't pick up previously because they were priced too high. Now right now, if you look at the NASDAQ, it's down around 6-7%. So we're heading towards correction territory. I just want you guys to prepare yourselves over the next few weeks. So when you're catching these dips in the plays, make sure you're dollar cost averaging into them. You don't want to put a lump sum in at one go, because you might be able to catch that stock at a cheaper price the next day or the next week. That's the best strategy. Now, if you've reached out to me and said, should you sell out of all your positions, try and catch a dip? You don't want to be doing that. You don't want to be trying to time the market when it's volatile right now. Just hold those quality assets in your portfolio and just catch the dips. That's the best way. The market is going to rebound. Now, in terms of where I think the market is going, like I said, we're heading towards correction territory, 10% in the NASDAQ, but I don't think we're going to hit that 20% crash level. Right, I think we can get as low as 15%. We can drop a couple more percentage points on the NASDAQ, but I don't think we're going to hit 20%. So I want you guys to brace yourselves over the next few weeks just for some volatility in the stock market, for some of your plays to come down before rebounding. Now, with a correction, it's a short-term curse, but it's a long-term win. Now, before we jump into our first play, I'm going to let you guys know this. Through every correction and crash we've ever had in the market, there's been a ton of millionaires that have been created, because while the others were fearful, selling out of their positions, they were buying these plays on the cheap. And when they rebounded, they were rewarded. So guys, now is not the time to take your eye off the market. It's time to be switched on, because what you guys do now could be a game changer for you guys in a couple of months' time. Up on screen, that's Zomedica, ticker symbol ZOM. Now we've already got this one in the portfolio, but as I always say to you guys, there's still a lot of value you can extract from your existing plays within your portfolio. Now, this is the play that manufactures pet diagnostic products, and as we know, pets are becoming more and more integral part of daily life. This is a trend that's been going on for years historically, but as we move forward, that trend is not losing any steam. And we know that as people take on more pets, that means the spending on pet care is going to increase. Now, they've got a big catalyst coming up in March. That's the launch of their product, True Former. So to make sure that's on your radar. And that's going to allow the vets to do what they need to do more quickly and more efficiently. And if done successfully, this is going to bring Zomedica millions and millions in revenue and can drive that stock price higher. Guys, let's take a look at the charts. So on the week's performance, we can see Zomedica's come down significantly with the market. And this is just opening up a good buying opportunity for us. Now, I don't think they're quite ready to be snapped up yet. That strike price I've got on them is set at $1.50. We're waiting for them to come down a little bit more. Now, they don't release too much PR, and we know the market's still volatile right now, so I think they'll trend down to that strike price and we can snap them up at that point. And if we extend the charts, we can see this place hit around $2.70, and I do think they can retest all-time highs upon good news from True Former. Up on screen, that's Orbital Energy Group, ticker symbol OEG. This is another one of our MVP penny stock plays we already have in the portfolio. As you can see, we're sitting at well over 200% return in this one, where sometimes you just need a second bite at the apple. And this is looking like a good rebound play once all the noise is cleared. Got to remember, Orbital Energy Group, they have their solar division, they have their power division, they have their gas division, and they recently have their drilling division. They're like a holding company. They go out there and acquire different energy assets. Now, we know a lot of the energy market is down, so a good entry point is opening up for this one. So as we can see, I like this play under $6. So that's the first strike price on this one. Catch them on the $6, we load up on this play. We know they're well capitalized. They've done a lot of stock offerings. They have cash on their balance sheet to further fund those acquisitions and grow their business. We also know they win a lot of partnerships. One of their most significant ones that I put on your radar last time was they're decommissioning a load of power stations and turning them into renewables. Now, this is set to bring them millions and millions of revenue over time, right? So this is a good asset to have in your energy portfolio. Now, put something on your radar, guys. Back when the pandemic happened, a lot of stocks dropped down. We had a lot of the airlines drop down, right? We had a lot of the travel industry drop down. There were certain sectors that were affected more than others. And the best time to buy was at the bottom of the dip. Those were the best rebound candidates. Now currently, it's the energy assets that are the best rebound candidates to buy in this current period of time before they rebound. So I want to make sure you guys are switched on and thinking about that when you're picking up these dips in the market. Up on screen, we have BioChrist, ticker symbol BCRX. This is one of our biotech penny stock plays. You guys know, ever since we picked this one up, they've been moving up for us. So as you can see, we're sitting at over 30% return in this play, and we're going to hit the double up. It's only a matter of time with this one. Now, we like them because they had their product called Olideu, which they received US FDA approval for in December, and they're already rolling that out, making sales as we speak. They then received Japanese approval in January, and we're waiting on European approval. But I want to put on your radar, they received some good news yesterday, which makes them one step closer to receiving that European FDA approval. And you guys know, like I told you yesterday, despite the noise that we have in the market, despite the panic, the sell-off, the volatility, there are plays that are flying under the radar, hitting their business objectives month after month. And one of them is BioChrist. I want to make sure they're on your radar. Now, if we look at the charts, we can see on the week's performance, they're not too far out of line with the NASDAQ. This just tells me when we start seeing an overall recovery in the market, BioChrist is set for good things. Now, we've already hit all-time highs of over $12 on this play, and it's only a matter of time before we start retesting those all-time highs. You've got to remember, they're rolling out their product in the US, in Japan, and soon in Europe, and they expect peak global sales of over 500 million from this product. Now, once we receive good news on that, it's going to send that stock price soaring. Guys, let's talk strike price. On this play, if we catch them under $10, it's time for us to load up on this play because they're set for good things. Alright guys, so this is the play that I picked up in the market today. I couldn't resist with this one. Up on screen, that's High Tide, ticker symbol HITIF. Now again, a play we've already got in our penny stock portfolio, but I want to ride this one up because they're set for some good things. So firstly, let me draw your attention to the weekly performance, guys. Strong performance on the week considering the global market situation at the moment. When you see those plays that have almost pretty much blanked out the market situation, but they're still performing as if it's business as usual, you can only imagine how they're going to perform when everything clears up and it's onwards and upwards for the global market. So they're doing things right. Last time I brought them to your attention, I told you they'd just opened up their 70th retail outlet. Right, so you can see they're on a big expansion push, and I'm always looking for those plays that are expanding, because as they expand, those revenues go higher. As the revenues go higher, that stock price increases for us. And last time I mentioned they're making plans to acquire a company called Smoke Cartel. That transaction is moving along nicely, and that expands them into the accessory space. Not only are they expanding their footprint, they're broadening their product offering as well. They're also cleaning up their balance sheet. Now, I like those plays that clean up their balance sheet, strip that debt out, so that makes them more profitable, gives them more cash they can use to fund and expand their business. And if we look at the charts, we can see this play hit all-time highs of around the dollar mark. Now, they will retest that. Got to remember, they're on a big expansion push, acquiring companies. They're also expanding their footprint, as I mentioned. But under the Biden administration, if there's positive regulatory changes, this could give them a further push upwards. Now, guys, let's talk strike price on this play. Catch them under 60 cents. Load up on this one. This is another double up candidate we have on our hands. Also want to put on your radar, next week they're coming out with their earnings. Now, I expect good financials reported, but also I expect good guidance going forward. That's what you guys should do when you look at these financial reports. Not only look at the past quarter that they've reported, but look to see what the management says about the future of the business. Alright guys, let's talk about how we can level up as investors. So what I want to talk to you about is false signals. This is where you see a trend reversal happening, only for it to quickly change back the other way. But you've already based your buying and selling decisions on the first move. Right now, you guys know we're in correction territory, so a lot of your plays might be red, might be volatile right now. But along the way to us moving into the green, you're going to start to see a lot of false signals occurring. So I don't want you guys to base your buying and selling decisions on the first time you see a play in the green. Now, I've shown you guys the charts, the RSI, the Fibonacci. I've shown you guys the standard deviation, the simple moving average, and a whole load others for you guys to use to as a sense check to see if there's actually a trend reversal or if it's a false signal. So I don't want you guys loading up the first time you see green. That's why I always say, make sure you're dollar cost averaging into these plays over time. You don't want to just put a lump sum for it to drop back down the very next day. So be aware of the false signals in the market. Alright guys, been rocking with the channel, you know what time it is. Question comes from Philip, says, so once more we have an all red ocean. What does your experience tell you in regards to buying the dip? If you want to average cost down but the market still looks too risky, should you do it now or should you wait until the stocks close in the green? Or should the stocks have 2 green days to validate a potential reversal? I'm glad to see the number of your subscribers is starting to blow up. Firstly, thank you for sending this in. I know it's going to help a lot of people out. So what I want you guys to start looking at first is look at the magnitude of how much that stock has been dropping over the last couple of days. So when the stocks first started dropping, you might have seen 10% drops in that stock price. Then it might have moved to 5%, then 1%. They might have finished flat. And then you might start seeing some consolidation happening. So it might have gone up 1%, down 1%, and trading sideways. So just ensure when you're jumping in on these dips, ensure the magnitude of the drop hasn't been 5 or 10% the day before. You want that drop to be slowing down, slowing its velocity, and jumping in when that stock is starting to consolidate. That's the best time, because when it's consolidating, then it's getting ready to correct and move upwards. Also want you guys to be paying attention of the upcoming catalyst for that stock, because once the market starts turning around, and if these plays have catalysts coming up, that's a double effect right there to push that stock price up. Now granted, right now the effect of the catalyst is kind of subdued. We know a lot of stocks have come out of good earnings, but the stock price has almost been in the opposite direction of where the earnings have moved. But do pay attention to the catalyst, and also take a look at the charts as well. You guys know I've shown you the RSI, I've shown you the stochastic. Take a look at those videos, and what you want to be doing is when you're catching these dips in the stock, make sure they're in the oversold portion of those indicators. You don't want to be buying anything that's trading in the middle. Make sure it's oversold, because that means you're getting these stocks on the cheap. That's exactly what we're trying to do, trying to pick up these stocks on the cheap, load up, get ready for the rebound, and then reap the rewards. Alright guys, so that wraps things up. Now as we move into the weekend, I'll be prepping you guys ready for that Monday morning opening bell in the stock market. You guys know we've got stocks to buy next week, we've got penny stock videos and a whole load more to get you guys prepped. So do hit that like button for me, hit the subscribe button, and I'll catch you guys in the next one.